The initial public offer of Life Insurance Corporation is set to open for subscription today. At 21,000 crore rupees, the offer will be India's biggest issue till date. The next two biggest issues that hit the street in the past were that of Paytm owner 197 Communication and state-run Coal India. Globally, this is the world's fifth biggest IPO in calendar year 2022. LIC's IPO witnessed robust traction from leading investors including SBI Mutual Fund, Axis Mutual Fund and Aditya Birla Sun Life MF. The company raised around 5,627 crore rupees from anchor investors on Monday at 949 rupees per share. However, much of this amount was raised with the help of domestic mutual funds as foreign funds invested little over 1,600 crore rupees. Analysts say the low demand may be because of the present risk aversion among foreign portfolio investors. Nonetheless, the government is hoping to see bumper subscription levels for LIC, riding on the back of retail and non-institutional investors. Over 8,500 crore rupees worth of shares have been reserved for retail investors, policyholders and employees in the IPO. LIC policyholders are entitled to a discount of 60 rupees over the issue price. The retail investors will be offered the issue at a discount of 45 rupees per equity share. Therefore, if you are someone who is wondering whether to apply for India's biggest IPO amid market volatility, here are the key things that you should know. LIC's total assets under management is over 3.2 times the total AUM of all domestic private peers. It also enjoys premium-based market share of 64%. At the upper price band of 942 rupees, LIC is available at a price to embedded value of 1.1 times, which is at a discount of 65% compared to the average valuation of private life insurance players. This valuation, analysts believe, factors in most of the negatives that the insurer is currently facing.
That LIC has exposed itself to. Number one being market share. Obviously it owns a large market share, but a closer look at the metrics over a time series could reveal that it has been continuously also conceding its market share to private peers. It has been losing market share and it is high time for it to get a stronger grip on retaining its market share in the life insurance space. Number two, it's huge reliance, almost a little bit shy of 100% reliance on its individual sales agent network could also be a vulnerability for LIC's growth and scale going. So these pose to be challenges. At the same time, the financial metrics are not really very glorious, at least when compared to its private peers. The profitability continues to remain under pressure, the margins remain under pressure, and most of it can be attributed to the low margin product mix that it has decided to be focusing on, which we expect to change.
The company's low value of new business margin, that is indicative of profit margin, was at 9.9% for FY21 compared with 23 to 26% for private players. It further has lower short-term persistency ratio relative to private peers, which shows lower customer stickiness. However, the insurer's strong market presence, coupled with the highest return on equity ratio domestically, is keeping analysts bullish on the issue.
The outlook on the overall life insurance industry is really optimistic, and if LIC plays its cards right, we expect it to be able to recoup and recover some lost ground and gain a much larger market share going ahead, provided it focuses a whole lot on its distribution effectiveness and financial efficiency. This could be a long-term value creation story for many investors. So overall, we are optimistic on the prospects of LIC as a business going ahead. While the market decides the fair market value, the right price that needs to be paid, for now it seems to be reasonably valued, and the growth prospects being more in favor versus the challenges that the business faces.
B. Gopkumar of Axis Securities too sees LIC as a long-term investment bet. While he expects the near-term market volatility to weigh on the stock performance, he believes the under-penetration of insurance and improving financialization of savings could make LIC a long-term value bet. Given this, Analysts remain uncertain about the initial listing gains, but view the IPO as a mid to long-term investment opportunity. As of Tuesday, the stock was commanding a premium of 60 rupees per share, indicating a likely listing gain of 6%. Overall, though the markets are volatile, analysts believe there is enough liquidity in the Indian markets for a large issue like LIC to get enough subscriptions.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.